going to record it. We are now recording. We're not going to share it on YouTube tonight just to see what it goes on. All right, and the screen. Can you see my screen share too?
Yes. Can you move your mouse to make sure it's not like a frozen image?
See that
Yep.
moving?
Cool.
Perfect. All right, we're ready to get going. Where do you want to start us at tonight? How many people we got in here? We got anybody in here tonight so far?
We got Rookie. Rookie's in here.
We always have Ricky in here with us.
I know. It's great. I yeah, I think what I'd like to start is just kind of an open dialogue about inflation and kind of market psychology and where do you think we're headed, and kind of go back and forth with some theses that I have. Obviously, the we've I've evolved as a trader. You've definitely evolved as a trader and being more of a scalper. So having the macro thoughts and all that stuff doesn't necessarily translate into current plays you're gonna do, but it's also good to just kind of know what's forthcoming and maybe be able to play a nice strong trend up or down given based on the market sentiment out there. Would you kind of agree with that?
Yeah, absolutely.
Yeah, so that's kind of where my head is at. Obviously I've uh, been banging the drum of core puts and core positions and things like that, and you've been on the other end telling me you shouldn't do that. Not that you're advising me by any stretch, but just as a friend and as a someone who's in this doing the same thing as we're all doing. Um, because market sentiment is shifting so fast that you can get your head torn off. And what I found with the core puts, I actually did a full I analyzed them, and I'm actually a little bit red on them, but there's a whole lot of heartache that went into that. So to me, there's a time and a place to play them. But I think it also, when you have those types of positions, you kind of get yourself in a bias want for a big move. So like it has to be a big crash for you to cash it out, or it has to be a big move to make it worth your while. And the reality is we just may not get that for a little while. So that's kind of the intro I wanted to start out with, just so everybody, I know Rookie's listening, but that's kind of where I'm coming from here is more of a just kind of studying the macro outlook, but not necessarily playing a long term macro play.
Right.
Um, if you have anything to add on that, I know it was more of a statement than it was a question, but
No, I mean I think that's actually. I think you're learning.
yeah, yeah. I mean, it takes a while. I'm stubborn.
Yeah, well, I mean that's part of it. That's part of the process, right? So, yeah, I mean I'm with you. I don't. I think this market is just it's confused. It's in a state of doesn't really know what it wants to do, where it wants to go. It wants to go up. I mean, it's obvious that they want to push this thing back up, right? I mean,
Yeah.
we're seeing every chance they get, they're pushing it back up. But kind of going through some charts, I dug deep into, of course, by uh, the VIX and Dixie, and there's some telling signs in all those. You called it out earlier. VIX and Dixie, they both kind of popped up on open, right? Or when they open back up, and you're seeing. I hadn't even looked at it lately to see where we're at, so I'm kind of my thought process here is about 4 hours ago. So don't quote me on any of this, but you notice that they were all kind of at the bottom, right? The
Hmm.
dollar's taking a beating, VIX is definitely taking a beating. I mean, heck, anything under 18, 20, $18, that's low. And you're going back and looking over time, the only time really that it's been that low, I guess it was around 15 when that real big you know bull market rush where it had to do something. But I
Yeah.
think it's telling us right now that we've got to have a pullback, right? The Dixie going the way it is. The only thing that concerns me on a pullback is Dixie. They're going to have to do something with the dollar, right? The dollar's been just been crazy, and it's finally come back down. The last few days, looking at it, it's taken, like I said, it's taken a pretty big beating the last few days, last couple of weeks. But, 'cause, What worries me most is this whole China thing with the. I got a feeling. I don't know if anybody watched the video that I shared. It was a statement in the video, and I think a lot of people just kind of focused on that part of it. But with China opening back up, this is the first time China's coming after us. I think and coming after the dollar, right?
Hmm.
Them and Russia are wanting to change the currency. The U.S. dollar is not what they want to use. They want to use the ruble or the what's the Chinese currency, yen or whatever it is
Yeah,
now.
yeah, yeah. Our Juan,
So
Chinese Juan.
yeah, and with them opening back up, what they're doing is they're going to flood the market, right? Not the stock market, but the overall market here in America with goods, and we're going to have inventory issues. And what's the best way to start a recession and to make the dollar go down is to have a recession take over, right? Like that's just kind of my thought process with it, kind of looking back. So I'm interested to see what happens with China, what happens with the goods coming over. Does the market actually get flooded and we have a vast amount of inventory that we can't move? Does the dollar continue to come down? Does it weaken more? Right now, I'm expecting it to bounce. We'll look at charts here in a minute. We'll go through. Like I said, I got SPY pulled up here, and I want to talk about a couple things with SPY. Kind of what I've noticed been happening, especially since we've before this whole little range area, right? Remember we stayed right here for a couple weeks in this range, and we finally broke out, came back, and broke back out. But it's been telling us for a while that hey, this is kind of how you play these levels, and then we're going to move off of them. And I'm gonna kind of show you today what I've been thinking, and kind of get an idea of what might happen. So, do you want me to start on this, or do you want to go into something else, or
No, I think this is a good way to start, and then we'll see how that backs up in some of the macro theories, as well. So
okay?
yeah, let's go ahead and let's do it.
So what I've been noticing, and this is the hourly chart, and this is for the last couple of weeks. Notice when we get this little consolidation, right? When we break these consolidation zones, we're having drastic moves away from the consolidation zones, right?
Hmm.
It's been doing this for. I mean, we can go back. Let's look back a little further back. Consolidation, we drop on it. We have consolidation here, we spike on it. I mean, it's been pretty consistent. Here, probably the longest consolidation we really had that was just consistent with not a drastic move out of it. Uh, Consolidation drop, consolidation drop. It's kind of the same theme a lot. Consolidation drop. Here, a lot of consolidation, and we got a big move off of it. Here, we got a lot of consolidation, got a big move up. So, what I've been seeing and what I've been noticing is look back down here. This was the level that I noticed, this whole little level right here. We got a drastic move off of it, but look how that ended up being our resistance for a couple weeks.
Hmm.
It stayed in our resistance. Finally broke through it. We came back to it, but now it's showing support. So what I want to see play out now is to see if this little consolidation area here, if this turns into the same consolidation area like this bottom and this bottom right here, where it comes back into support. So you can see we're what are we 398, 397, 70, 80 right now. We're dropped a little bit, but I want to see if this holds. If this holds, then I think we'll get a bounce back up to here. If it doesn't, and I think once we get here, I think it's going to be just like it did. And I'm not saying this is going to be the same time period, but I do look for it to get here and to kind of come back down. I've got this as a pretty good zone. Notice we left some buyers here, right? Buyers and sellers here on the top. Because when we moved away from it, we moved away from it pretty quick. But look how long it stayed here before we got that move. You
Yeah.
had 2 3 days where it just stayed in this little level right here. Well, actually, about a day and a half, 2 days, where it stayed in this level, then it came off. So I think there's a lot left here. I need to get better at bookmap and to go through bookmap and it actually show us what it is. But since I'm not using bookmap, I can go back to the old VPA over here and you notice all this volume here. And we're in a heavy volume area right here.
Hmm.
Are you able to see that on the screen? Is it showing through?
Yeah,
Okay.
yeah, yeah.
And then look where this zone lines up with. This zone lines up with a huge volume area, right?
Mm.
So you have to think that this zone is going to actually hold as support. If it does break through it, I look for it to break through it after hours, where there's less restrictions. How many times have we seen where they gap over a zone and after hours, so they don't have to deal with it, during market hours, right?
Yeah, all the time.
So my thought process going into tomorrow is if we hold this overnight, if we do come back down this area, I look for it to bounce back up. And then, like I said a minute ago, let me open this up. I look for it to come back up to this zone here. You can look. I'm gonna pull this down some. Come on, work with me. There we go. So you notice we get this zone. I'm sure you remember this zone. Remember us talking about this big zone up here last time?
Yeah.
And then it just so happens that this zone, what does it line up with? It lines up with the big volume shelf, right? So if we can get up here, it's going to be a struggle to get past this. If we can get past this little area here, then we actually have a little bit of room to move up all the way back up to that 410 to 415 range. I'm gonna keep a close eye on Dixie and Vix though at this point. I want to see how it reacts. I want to show you what I pulled up on Vix. I remember when we were in the old Discord. I think it was Bones that said that you can't do TA good on Vix, and kind of going back and looking, I could not disagree with that more. You can do TA on Vix. It's
Yeah.
there. It shows up. It's obvious. And this, I left you. I wanted to show you where these zones were. So we're down
Hmm.
at this bottom. We got a big move here, right? We got this gap up. It's kind of holding right now. So we're going to use this as a zone at the bottom. This 18, let's say 18 to 1820, 1830 range. I look for VIX to struggle mightily at the $20 range. I think they're going to keep it below 20. If it does go back above 20, then we're going to see, everything we were talking about on SPY a minute ago is going to be obsolete because we're going the opposite direction at that point. But my goal, what I'm looking for here on VIX, and I'm not a huge player on VIX, right? I don't think we should use it as a standalone indicator, but I think we can use it with other things that we're looking at where it makes sense. If you look at VIX, you look at RSI's got to cool off on the SPY now, right? Because we're pretty heavy on RSI. Where's it? Where's the RSI at now, Linus? Do you know off the top of your head on the like the daily and the
It's actually not bad on the daily, and I mean the 4 hour is a little high. I mean it's up to the upper like three quarters, right, of that 70. I think it's at like 50, 55. So it's up there.
got you?
The 30-minute 1 hour was overbought and now has pulled back to, still very pretty much overbought, but not to that extreme reading. So there's room on the daily to go up.
And that's kind of my thought when I was talking about RSI before. I've heard you say, my son's walking in, so excuse me on that. I've heard you say before that you got to pay an RSI tax, right?
Yeah,
Well, what's
yeah,
one way to pay an RSI tax? You don't have to have a huge drop. What, consolidation?
yeah, yeah. Just consolidation.
So you can, that consolidation can get RSI back in track where it needs to be. So just something to look forward to. I don't know if we're going to get the drastic fall, but I do kind of look for VIX in the next week or so. Could be this week, could be next week. Kind of depends on how everything plays out. We've got speakers. I think you pointed that out. We got speakers like crazy this week. So sometimes the market will go insane looking at what they're saying. If they do anything besides any kind of indication besides 25 BPS coming up, we might see a huge rally. They might put 50 back on. I'm worried to another point that they are going to. Well, one thing before I get started, that the Fed is a lagging. What's the word I'm looking for?
Um, yeah, they're not proactive; they're
Right.
reactive.
They're reactive.
Yeah.
So with this latest thing where it looks like, hey, inflation's coming down, blah blah blah. Do we need to cut back more than what we were because we're struggling in other areas? That's my biggest concern. If some kind of data comes out that shows that, hey, we're in a recession, we're going toward a recession, the economy's getting worse, something like that. How does the Fed react? Do they change it and react. Hey, we're going to cut back to zero and kind of see where we're at for a while. If we do that, the stock market's going to go crazy. I think for a minute, I think that would be short lived because then we would have other economic issues happening that's going to cause it to come back down. I don't know. I've got a lot of thoughts going on in my head, and they're all coming out at once. So if I'm rambling, excuse me, Linus. Just cut me off and
No, you're good.
let me know. But here's a level I was watching. So this was Friday's move, the green lines, right? This is where we were Friday. Notice that they opened the VIX up above Friday's high, that 1940. It's going to be key to see if it can hold this level. If it holds this level, I look for it to come back up in this 20 range. 2050 is going to be probably my closest where I think it's going to stall out some more. But you look, they consolidated here for a while, so we could have a lot of congestion once it gets here. And then right above that, we had some consolidation too. So could be a little more upside than what I'm thinking on it. But personally, think we come back up in this area and then we start to trend back down some. And of course, we do that. SPY's going to take back off. Let me pull Dixie back up because I charted Dixie out too because I want to make sure. I know we've used Dixie in the past and we kind of went away from Dixie, and why are you not acting right?
Yeah, you gotta add that dollar sign.
Well, it usually adds it for me. Now it's going to act stupid. So whenever I go live, for some reason, it just does not. It changes the way everything acts, which is crazy.
Yeah.
So let's pull this hour. So you can see we broke out of the trend line that we were in on the Dixie on the hourly.
Hmm.
We're down in this zone that I have down here, but look at this consolidation on the Dixie, right?
Yeah.
Consolidated from pretty much all last week. We had consolidation until the end of the week when we dropped down, and then we're right back into a consolidation zone. So I want to see how it actually reacts from here. Since we're in this zone and we're consolidating here, do we pop back up? Do we go to the bottom of this zone? Everything is slower when you. I just wonder why Live does this.
Hmm.
There we go. So do we come back out? You see the levels we got here. We got the 101, then we got the 101, 101,998, so 101.99. We've got levels down here to kind of hold it, but this zone right here, looking back, was a pretty big zone on the dollar. So I want to see if we get a bounce out of this. Kind of looking at this with the VIX, I kind of believe the same thing. We might get a bounce. And then do we show resistance back up here, which I feel like we might.
Hmm.
Because if you look, everywhere we had here, it showed consolidation, then came back up. Then what that consolidation do? That it turned into resistance, or I meant to support. Then it broke through, came back into support, and then it broke back through it. So I want to see how it reacts from here over. I think it's going to hit and act as resistance and maybe push us back down. And like I said, all this is saying, take this with a grain of salt because they could come out with any news next week at all, and the dollar rips, right? And then if the dollar rips, we know that
Yeah.
typically.
So
Yeah, go
on
ahead.
the dollar front, you have Wednesday morning, you have the euro and UK inflation rates. So that could have a impact on the Dixie, and they expect that to be high still. Um, so you could see the dollar strengthening versus those two currencies. So that could be a catalyst event for the Dixie. That's Wednesday morning, 2 a.m. for anybody interested in rolling the dice on that. And then that same day at 8:30, you have the PPI for US. So looks like Wednesday will probably be, kind of a catalyst day for any sort of Dixie move. So not tomorrow, but the next day. I actually wanted, if you could, this actually works well. If you could, do you have the analyze tab on your Thinkorswim?
I have no clue.
Okay, well, just in the symbol, search CPI. Um, That's actually a super interesting chart. I don't know if it'll pop up. Should be yeah, it's not gonna be there. Okay. I'll Can I share my screen or no? Is it?
Yeah, hang on. Let me. Yeah, you should be able to. Let's see.
Let's see.
Oh, did I? Am I still streaming?
Says stream is ended.
Okay, you should be able to share it now.
Try it again. Can you guys see my screen?
Yes.
You can see it. Okay. So this is the CPI on a monthly basis way back to like, you know, eons ago, 1977, et cetera, et cetera. Okay. So I'm going to do this for more dramatic effect. So at the end here, we're at 2012, and you can see the peak here is at 3.8%. So as we go along, we're at 2015, 2016, 2019. Here's 2020, and here is our current rate of change. So this is rate of change. This is the CPI reading. So at the very peak, we were at what, that 9%. Okay. So what I want to highlight here from a macro discussion is everybody that's getting excited about inflation coming down, they're forgetting of how much it's actually jumped since 2020. So you have this huge move here, and these gray areas, by the way, are recessions. So these are recessions back in the 2000. Here's 2008. You can see what inflation did. It kind of went in and then died. But that is why the Fed believes that they may have to cause a recession to get this particular thing in order, because it's happened in the past where a recession has basically fueled it and then kind of came back down. That was back in the 90s. Um, yeah, back in the 80s and 70s were a wacky time. But what I want to, again, I want to highlight this massive rate of change here based on the last decade or so, or 2 decades in this chart, is people that are getting excited about inflation coming down is correct. Yes, it is coming down. However, what it's doing is, so inflation is a rate of change per year. So if inflation slowly comes down to about a 4 to 5% rate, or even 3% rate, it's still locked in all of this jump up, right? Like the prices have gone up during this whole time. So what my point here is, it's very easy to get excited about the inflation falling down, but the bulls have been able to pass on this narrative pretty well. And so from a psychology standpoint, we're entering a period where the Fed is starting to slow their rate hikes. So they went from 25 to 50 to 75, 75, 75, 75, now 50, and now anticipated this one being 25. So if you put that on a chart, you see it go up and flat, then down. So they're slowing the rate hike pace to 25 basis points. Inflation on its own is coming down based on last year's, huge spike. So the bulls are going to have this narrative, this happy-go-lucky thing that's saying inflation is dead, Fed is going to be happy, and this is why the pause theory is gaining so much steam. Now, what happens if the Fed pauses rate hikes and holds the line? Well, inflation can keep coming down, but as Maverick points out, if the market decides to rally, that means the Dixie will fall because people become more comfortable in the market. Therefore, they're not putting any as much into the Dixie. And also, weak consumer gets kind of peeks its head into a weaker economy. So commodity prices start to rise. And therefore, when commodity prices start to rise, inflation will start to tick back up again on the top line. But we all kind of know that, but all of that takes time. And that's the number one important lesson I've learned from it all. Sorry if my charts are all sort of whacked out. But it all takes time. And unfortunately, we play a game in options or in futures or whatever it may be that takes time into consideration. So, what I'm looking at from a more zoomed out standpoint than Monty had, so Monty's playing the hourly. I'm seeing here in this red line, we're at the 200 MA. We're obviously right at the downtrend line. So I'm thinking we get a small pullback, whether it's 390, 393, whatever it may be, and then a breakout of this trend line. And I think, you just draw lines for sake. But if you can break above this trend line and test about a 407 area, you're going to get a lot of euphoria in the market. And whether we like it or not, or, the bulls have proven in this past week or two that they are just itching to re enter this market and they are ready to get back in. And so all they need is a reason to re enter. And inflation coming down, if you've been told for almost 2 years that inflation is a problem, inflation is our number one viewpoint from the Fed, and you start to see it come down, is that a reason enough to enter the market? I think for a lot of people it will be. And I think you're going to get some euphoria that's going to run the market a little bit higher. So, why I kind of say all that is a crash of this like epic proportions probably not in the cards and probably not going to happen for a little bit. I mean, it's going to take something breaking in the Fed, or sorry, in the economy for that to happen. But unfortunately, all that stuff, like we keep saying, it takes time. And this is just a market that wants to go up. Now, we will pull back. You will get my assumption is you'll get that pullback and a rejection at this line. And I think a lot of bears will feel emboldened there that their play was correct. I'm gonna pull up the hourly, but there is bullish divergence on the hourly. Damn it. Sorry. So right here to right here, you see a higher high here, and then here was the previous high on the RSI. Here's the previous high right there. So you have a divergent high on that, which is showing that momentum is slowing. So it is ripe for a little pullback, but that's only on the hourly. On the daily and on the others, you're not seeing that just yet. So again, you're at a trend line. You're above or you're right at the 200 MA. Probably see a nice move down. No, not a nice move, but maybe a move down to test maybe 390, possibly about 393 would probably be my guess. Or where I would be looking at maybe thinking about going long again. And then just the boom upwards where you break 400 in my opinion. So I think it's important to be nimble, but again, the macro discussion here is CPI inflation is coming down. If we look at unemployment, so unemployment, went crazy in 2020, but is now these giant charts. Yeah, we're at basically a low of where we've been in the last long, long while, and with even a tick down than the last read. So you have unemployment going down, you have inflation coming down, you have a consumer that's still somewhat strong, and you have um, a bullish momentum in the stock market. So you kind of can see the case where the money is going to start to come in, and that's where I think everybody kind of plays off the melt up theory, what have you. But Um, yeah, it's something to consider, something to look at. And again, ultimately, there will be a move down, and we will make newer lows, in my opinion, in 2023 than we did 2022. But it's going to take a shift of something actually breaking or um, commodity prices really rising to a level that scares the market. Or, and they report in a couple weeks, Apple's earnings being a bit abysmal because Apple is the market. So that's kind of in a nutshell what I'm looking for. And that's probably why I've stayed with the scalping mentality more here lately, but probably moving forward, it's been working. So why not? But it's just one of those things. The market is confused. I mean, that CPI report came in right at expectations, and you just saw the confusion in the market. I mean, it was just static. It was just stagnant for a few hours. Didn't know what to do. And the fact that a CPI report has the market close like 1.5 points from the previous close tells you everything you need to know. Now, from the Bulls standpoint, you look at that and they held on to all that momentum heading into the CPI, which is pretty impressive. And again, kind of consolidated, and it's just bullish right now. Now, I do expect a pullback, but I do also anticipate a lot of bears getting trapped on that pullback. So, um, yeah, that's kind of my thoughts. I mean, as much as I want logic to play out with the inflation readings, it's just it doesn't matter what I want. It doesn't matter what should happen. It's perception and psychology, and it's definitely in the Bulls' favor right now. That's I don't know how to sound not as defeated as a bear, but sounded pretty defeated there. So next steps, I think you would say, um, let me stop streaming here. So next steps for me would be just scalp, play it small, and ride the momentum probably down for maybe a day or two, and then look to enter long to go scalp it all the way up. So, Monty, I think that was your chart basically in a nutshell. But from a psychology standpoint, it does appear that the Bulls narrative does have some merit, and it is gaining some traction.
Yeah, I think you just said in a nicer way the exact same thing I just said, pretty much, right? Looking for a pullback and then to go back.
Yeah.
So, yeah, I think we're thinking alike. Whether it plays out, nothing ever plays out exactly like, or all the time exactly like you think it will. But in my mind, I'm thinking that I'm looking. If we do come back and test this zone here, I will look for the scalp longs out of it if it holds the support. Pretty simple, I think.
Yeah, so the support you're looking at on a pullback was about what, 393
It's
or 390
pretty much
386.
we've got 396.50 all the way down to 394.50, so a dollar move there. So it could get this 393 level was Friday's low too, so that could be a spot to get back to. In my opinion, I don't look for us to get back. I could be wrong, but I don't look for us to get back down to this zone right now.
Yeah, I
We
don't think so
tested the
either.
range earlier, so I look for a bounce. Pretty much, from here down to here, probably. Like you said, 393, 394 down to 390, 391, somewhere around that range. And then if we do get that, you're going to look to pop back up. Our trend lines are just a little bit different, I think. Mine's a little higher than yours. So I've got the trend line up above 4. If it waits later on the week, it's going to be above 401. Uh, we break that 401, then we get back up in this zone where I was talking about with the 414 to 410 range. This is what I personally think. And of course, then you would look for a pullback. Market doesn't go in a straight line any direction, right? So
No. learn that.
I think we're thinking pretty much alike, which is kind of scary.
Yeah, that is scary. Um, as far as events next week, we've got PPI said on Wednesday, um, and then the UK inflation data on Wednesday as well. But also, you've got just like you said, a ton of Fed speakers, and then Netflix kicks off earnings for everybody tech wise on Thursday after hours. Tomorrow morning, you have Morgan Stanley and I think Charles Schwab reporting. So you have more banks, and then I think Wednesday you have Procter and Gamble. So you have a big consumer staple. So um, it's earnings season. So yet again, another reason why you can't really play any sort of trend too long because a couple of these earnings can come out and then it's completely on its head all over again. So yeah, that's what I got. Um, I think that's pretty much it. So the basically the thesis is pretty simple, pretty well outlined, and you can play it from a psychological standpoint or from a technical standpoint.
I think both are
So
pretty close right now. So,
yeah. All right, that's all I got. I'm gonna watch my Bucks continue to get crushed.
well, the good thing
So
is the Cowboys can't make extra points. So,
it's incredible. Well, Brady can't. I think Brady has like 12 completions for like 120 yards. So fun.
yeah,
Just
that's what it looks like. I've got it on above me while we're talking, and it's an ugly, ugly game. But at least it's halftime. Hey, you're halfway there to getting beat, Linus.
yeah, and it's in these playoffs, the person with the big lead has not really ended up winning, so
That's right. So,
I'll take it.
got them right where you want
Exactly right. All
them.
right, guys. Have a good one.
Anybody have any questions before we get off here? I see we got big
Oh yeah.
rookie.
Yeah.
I'm just curious how long you guys think the rally might last. Because I'm looking at these numbers. I listened to like Maverick and I'm reading through some posts, and I mean, you've got unemployment, not looking too bad, but at the same time, I keep seeing all these articles about like employers can't even find workers. It's like workers are just deciding not to work, which is a really interesting thing. And then I'm looking at commodities and I'm seeing some of the commodities hitting up to like resistance levels. You're seeing the dollar come down to the support. It's just really interesting. And maybe we've been in a bear market too long and I'm just like eating, sleeping, living bear. But it seems like it's like teeing up for the next move down, at least. Maybe.
Well,
I
Linus is
I
a perma bear.
yeah, I mean, I can say as bearish as I am and have been, there's definitely arguments on both sides. But the one thing, unfortunately, is we are in a transition of inflation trade to recession trade. And until you get the recession trade um, happening, and right, that's jobs data that came out way too hot, and unemployment came down, wage inflation went down, and therefore the market said, "Oh, wage inflation went down, so we're going to take that as a bullish mark." So the market is still very much in the inflation trade. And I think a lot of that is due to the positive momentum that of the Fed pivot narrative. So basically they just say that the Fed's lying to us and yada yada yadas. So unless Powell comes out and does, 50 basis points in the next meeting and then, signals that he's actually looking to do it again in the following meeting, I don't think I think market is just going to keep laughing at the Fed and ignoring it. And so, with unemployment being as low as it is, and with inflation coming down, you're kind of in this Goldilocks scenario for the bulls that they can run with this even for a month, maybe 6 weeks of everything's great, everything's good, and the Fed's going to pause, and therefore we're going to avoid a recession. And whether that's right or wrong, you can see it start to bubble up and play out. And you just got to play the chart as it comes. And if you're a commodities trader, which I know you've added a lot of energy stuff, you're you're not too upset if that happens because then the Dixie falls and we have to move up. But if you're just a bear looking for the next big move down, it's always possible, right? It's always possible that we just break and everybody gets their faces ripped off. But I see the bulls stepping in and buying a lot higher than they were previously, right? 393 ripped up the last two times it's tested, and that should not have been support like that. I mean, 390. Remember, after FOMC just collapsed on nothing, right? It just dropped all the way down to 380, and then obviously the buyer stepped in at 380. So there is some confidence in buying this market from the bulls. So just have to take it as it comes.
No, I completely agree. I was just kind of throwing thoughts out about more of the long term because, yeah, absolutely, I'm positioned in energy for sure because if the dollar drops and with supplies and what they are being in both commodities as the metals as well as the energy, um, there's a lot of talk about the commodity super cycle. But no, yeah, I was just kind of interested in the kind of that long term look, wondering kind of how high the bulls are going to run before that aggregate demand really kicks in and we see inflation becoming a problem again as the commodities start flying up.
If and this is kind of setting up again to well, me and Monty's bonding moment in July during FOMC. So in July's FOMC, we had the FOMC meeting, and then the next day, you had Apple and Amazon's earnings. Well, in February, you have FOMC without the projections, so it's just a regular FOMC meeting where he's probably going to announce 25 basis points. And then the next day, if Apple and Amazon report okay earnings or pretty good earnings, you'll have a repeat of what happened in July. And it just so happens that we're right near those levels of where we're at now. And that July rally ran to 430. So if you're looking for kind of what has happened in the past and with similar sentiment in the markets, I think you circle that as a possibility as the end of the rally.
Agreed.
And that's pretty much, I think, right where Maverick was pointing at in one of his last videos, too. So appreciate the conversation.
Yeah, no problem. Monty, do you have any additional thoughts on that?
No, I mean I agree with that 100%. I think first thing I want to see is if we I want to see where we're at if we just trend up and down before the FOMC. I would like to see us run that above 400 if possible if we want to get that move up with better earnings after it. But I'm thinking 414, 415 right now is doable before then. Uh, I do expect a move down off that before we go back up. But I mean, we've talked about the bear market we're in, and you looked at past bull markets, and that 415, that 430 area you're talking about. If we go back above that 430, then I mean you can go in and write us down. We're back in a bull market again.
Yeah, and you'll get all the analysts on the TV, and everybody will be euphoric, and certain meme stocks will be running, and
Yeah,
hopefully,
and another thing to keep an eye on. I know Twitter is Twitter, right? But you can usually go against the sentiment on Twitter, and your win percentage will be pretty daggum good. And it seems like everybody's bullish right now, so that pullback could come back a lot quicker than people think. We could get it tomorrow.
yeah, I think the pullback is going to be the big key indicator for me of how everybody reacts to it. Because then, if everybody switch bearish because it's convenient to the trend line rejection, then I think that's where everybody gets their faces ripped off. Unfortunately.
Yeah, we're tightening. We got a wedge tightening too. If you kind of look on the hourly, so it's gonna be interesting to see how it plays off that It's going to be probably the next two weeks or so when that wedge is you're out of room. So we got to go one way or the other there.
Yeah.
So I want to see that how that plays out. Personally, I think we go back. I think we're headed back to 415 in the next little bit. Not like I said, I'm not saying it's going to be in the next couple of days or the next week or the week after, but it just seems to be set up where we're going to consolidate. We're going to pull back a little, and then we're going to rip through it and consolidate a little bit, and until we get some kind of new. And of course, now this is all take it with a grain of salt. You come out tomorrow, and any war breaks out here in America, or somebody plans to attack us, or nuclear weapons, or they find more classified information at Biden's house, right? We're a little bit of everything. But good. There's a lot of talk about Biden stepping down too. That could be. Wait, let's see how that plays out. That's a.
Yeah, I mean, that could be a huge negative catalyst for the market because there'd be lack of confidence in Harris.
Yep.
And so you would have that tailwind. Yeah,
That'd also
it's
be a huge boon for energy, honestly. If
yeah,
you think Republicans are coming back in, it's a good time to
yeah,
be in energy.
yeah. That's the game we play is we have all these damn missiles flying at us, trying to figure it all out. But I mean, control what you can control, and right now that's the charts, and the sentiment is definitely ripe for a little pullback and then a rip up, and then from a 6 to 10 month viewpoint, I think once you get to those higher levels and commodities start to really break out, then everybody's going to kind of say, "Oh no," and inflation will rear its ugly head, and that's going to be the unfortunate part. But the bulls will find another narrative, so we just have to find a just to play the narratives. The one thing we know for certain is there's a lot more bulls than there are bears, and there's a lot more money that wants to enter the market than it is wanting to short the market. So if they can get a narrative that sticks, it'll run, and if they can't, it will go way down. So
All right,
that's all I got.
Ricky, you got any questions before we hop off here? All right.
I can't hear you. Yeah.
Linus, I appreciate it. Everybody else, thank you very much. I will post this once it gets through saving here shortly, and then it'll be in the market audio meetings channel here. I'll let everybody know.
Awesome, man. Appreciate it. Thanks,
Thank
Monty.
you. Thank you
Thanks,
everybody for coming
everybody.
on. Appreciate it.
Thanks so much.